Hey traders, welcome back to our channel. I'm Kenya with BK Trading Academy, owner, professional trader, and educator. And we help new and struggling traders learn how to trade with structure and guidance so that you start the right way, you have a breakthrough, and you learn how to trade confidently. And in today's video, we're hopping into a very powerful strategy for swing traders. And this is going to be focused on using Bollinger Bands on the daily time frame. I'm going to give you some specific rules to use with this strategy, and it's going to be perfect for you, especially if you don't have a lot of screen time. So before we hop in, do me a favor and smash the like button on this video. Make sure you subscribe, turn on the notification bell so that you don't miss all of our strategies and tips. And let's go ahead and hop right in.
Yeah, I know I got problems, and I don't know where to go. I don't want to put the blame on you.
So the very first thing we're going to discuss with this strategy is our entry criteria. When you are using a particular trading system, you always want to make sure you're following very specific rules as to why you're entering the market. This is going to increase your probability for better outcomes and also higher probability trades. We don't need a whole lot of rules. We're simply going to follow about 3 rules to get into this specific type of setup. So the very first rule that you want to always abide by is marking your key levels on the daily or weekly time frame. Okay, so you want to write that down. You're going to mark your levels on the daily or weekly time frame. The next thing you're going to do is you're going to wait for price to come to you. So you're going to set an alert at the level where you plan to execute, only where you plan to make a trading decision. And what I recommend, especially if you work a job and you want to be notified ahead of time before price gets to that level so that maybe you can step aside and go look at the trade really quickly to see what's going on, you can set an alert maybe about a few pips before price reaches the ideal area where you might want to execute. After you have marked your key levels on the daily or weekly, once you get that alert, you're going to simply go to your chart. You're going to apply the Bollinger Band, and then you're going to look for some type of candle confirmation, such as an engulfing pattern. You can look for a hammer or any other reversal candle pattern. Another confluence that we can use also for this particular style of trading is the RSI. Now, I like to keep the RSI at the 80 and 20 level. It's very popular for use at the 70 and 30 level, but either one will work. I find that the 80-20 is very powerful, and I'm going to show you what that looks like on the chart. So let's go ahead and go to the chart. We're going to go through some examples. I'm going to show you exactly how to apply this strategy. We're going to start out by looking at NZDCAD on the weekly time frame, and you'll notice that price rejected at 85.16. So one thing we know on this weekly time frame is that price is trading in an uptrend. Previously, we were making lower highs and lower lows before the price broke higher and broke above this resistance at 83.66. So now that we see that there's a gap between buyers and sellers, obviously buyers have been in control, and this double wick rejection tells us that buyers are losing steam. So now what we're going to do is look for a very strong reversal point on the weekly time frame. And this area sticks out to my eye. As you can see, it was a rejective high back in May of 23. And so I'm going to drag that out to this area here. And you'll see that now we have a horizontal level of resistance, but it was also support in the past where the market rejected the area and pushed up quite nicely. If we continue to explore the area, we can bring this out a little bit further, and we can see that it was also support and resistance a number of times in the past as well. And we can just kind of continue to study the area. But I like in the recent, I would say last few years or so, this was a very strong turning point. So I'm going to say up until about 2022 to 2024, this is a very strong reversal point. So this would have been where I would definitely keep my eyes on this level. I would have set an alert maybe at about somewhere around 84.34. And if we saw that price was continuing to climb, you simply look left, you look for the next reversal area. So if price doesn't turn here, you know that it's headed to this next potential reversal area. So we could have set an alert, and if we thought that price would push a little higher, we could have set a limit order. As you can see, the price is already overextended to the upside. And so it's really all about being able to pinpoint these type of opportunities. You're not going to always be able to watch your chart and enter off of a confirmation candle. If you don't have a lot of screen time, you might have to set limit orders and plan your entry, plan your stop loss, and just let the trade play out. And then when you have more time to look at your trade, you can scale out of trades and also set re-entry opportunities if that is desirable for you. So now as I go down to the daily time frame, you can see how price reacted off of this zone. We have a wick rejection right in that area. But if I simply go back to the weekly, if I apply my Bollinger Band, okay, you'll notice that price is at the top of the Bollinger Band. It's also in a reversal zone. This is telling us that we have a very strong confirmation. Now I can also add an RSI. When price was at that level, the RSI was also at the 74 level. Now I preferably like the RSI to be above the 80 level, sort of how it was back in this area here. So you can see here and then look at this area and look how the price fell. That's a very strong confirmation. However, price at the 70 level is also still acceptable. So once you have that confirmation and you're in the trade, then you want to determine your take profit targets. Now, your take profit targets can be traded in multiple ways. One strategy to take profit is that you can trade from zone to zone. All you have to do is look at the resistance, and if you look down, you can see where price reversed from previously. So I can see here, this is a little minor area here where the price reversed, so I could have took off a small position there. You could have also taken off another position right here at your previous daily support, right at that 84.37 area. And then if you believe that the price was going to come back a little bit lower or back to our support structure / previous resistance, this could also be a level as well too, where you could have marked a take profit target. Now, where should you set your stop loss? Now, obviously on the weekly, we can see that our structure to the left, price got as high as about 85.39. So preferably, I would not have placed my stop anywhere within this area here where I could have gotten prematurely stopped out. Preferably, I probably would have done something like this, where if I had entered the trade, let's say at 84.98, I know that this is all a reversal area, so I might have considered more short opportunity by placing an additional position at about 85.38. I probably would have continued to place another position at 85.62 and then place my stop loss above that. Now, why would I do that? Well, my journal has proven that when I trade very strong supply and demand areas like this, and we also have to consider fundamentals as well, but typically I don't have to take a stop, and I rarely ever hit a stop when I apply this type of method. So what you want to do is make sure that where most traders are setting their stop loss, maybe you're setting your initial entry or an additional entry, and you set your stop loss away from that. So that is one example. All right, the next opportunity we're going to look at is on GBPAUD. So as you can see on the weekly, we were previously in an uptrend, and that uptrend was violated when this low at 88.62 was taken out. You can see that price eventually broke below that area. Price retested and served as resistance at that previous structure that was broken, and the price continued downward. So now we want to look at if this were exactly what we were seeing, let's say on a Sunday, for example, we see that the price has fallen on the weekly. And one thing that I do see is that price has fallen into a previous reversal area where the market projected to the upside. So I'm going to go ahead and mark this level here, and you'll see that we have a level of support. So there's our support there. So this would have been the level that we definitely would have wanted to potentially take a trading opportunity. So we're going to find our level. We have our level there. And then we can also put a level above price as well too. So I'm going to set a level below price. I'm going to set a level above price, and you can see that this area is our previous resistance, but it was also our previous area of support that was broken. It's also a very strong support level where the market moves significantly from. We don't want to mark levels where price only move, let's say 30 pips. We're looking for levels where price move hundreds of pips from the area as resistance and also as support. So this is an attractive level because look, sellers have pretty much been dominating, and now price is falling into a reversal zone where opposing pressure came in previously. So we want to see if the market is going to react similar. So what we would have done is we would have set an alert before price gets to the level. Now price may not get all the way down to the wick area. So we're going to set that alert maybe at about 86.76 so that we can be alerted when price gets there. Once the price reaches the area, we want to add a Bollinger Band confirmation. We want to preferably see that price is piercing through the Bollinger Band. So something like this on this resistance here, this is a beautiful confirmation. Now, you're not going to always have that, but I will say that this is a confirmation for me, and I would have been planning that price could push a little bit lower through the Bollinger Band, definitely aligning with this previous low here. So I would have factored that into my entry and also planning my stop loss. So as you're in the trade, let's say if you got in right off of this support, where would you have taken profit? So if you study the price action from the past, you can see what the price actually did. So it came back to about 88.02. So that could have been one take profit target. We then continue to study from the past, and we know that this is a reversal zone. I like to trade from one reversal zone to the next. So if we trade this reversal zone, we're going to trade one reversal zone. Maybe we can enter a few positions, pay ourselves as price goes in the intended direction, and then we can, once the trade is halfway, maybe through initial phase of that movement, we can move our stop loss for any remaining trades to break even. And if we believe that price is going to get back to this level, we can have our stop loss and break even. So you definitely want to have a rule for your stop losses, but this could be our next take profit target because this is pretty much where buyers came in previously. So we expect that when price gets back to this level, this is potentially where sellers are going to step in. You could pretty much execute this on the weekly or the daily. You'll notice that even if I move down to the daily time frame, you can see that price started to consolidate at this level, and we definitely did have a Bollinger Band confirmation. And there you have it. What I love about this strategy is that it's simple and easy to execute, and that's exactly what you want, especially as a busy professional trader. So again, just to recap, the very first thing you want to do is look for those technical levels on your weekly, daily chart. You then want to set an alert and wait for the price to come to you. If you don't have an opportunity to look at the price exactly at that moment when you get alerts because maybe you're busy working or whatever you're doing, then set an area where you possibly will want to execute a limit order, plan your stop loss and your targets, and just let the trade happen and play out. That's how I execute some of my swings sometimes when I'm not able to look at the chart, and it pretty much works out very fine. Just make sure you have a backup plan so that in case the market does not respect your analysis, you know exactly how you plan to come out of that trade profitable or with a possible small loss. Other than that, once the price comes to your level, you're going to place your Bollinger Band on your chart and you're going to look for a Bollinger Band confirmation. Preferably, you want to see that price is piercing through that Bollinger Band. You're then going to look for a candle confirmation. So something like an engulfing pattern or a hammer or any type of other reversal candle pattern. You want to see wick rejection within that reversal zone that you marked up. So those are all good confirmations. And for extra confluence or additional confirmation, you can use an RSI. So if you use the relative strength index, you can look for your RSI to be at the 70 or 80 level when you're shorting or at the 30 or 20 level when you are buying. And there you have it, a very easy strategy that you can go and implement and document to see the powerful effects of it. If you have any questions, comment below. I'd be happy to answer. Otherwise, go and test this out. Let me know how it works. It's definitely powerful, very easy to execute. And all you have to do is apply it consistently to get consistent results. Master your risk management and your trade psychology, and you'll have a beautiful system. I hope you found this helpful. Don't forget to smash the like button, turn on the notification bell, subscribe, and I will see you in the next video. Thanks for watching.
Yeah, I know I got problems, and I don't know where to go. I don't wanna put the blame on you.